Hey guys, welcome back to another one of my weekly trainings. My name is Danae Wolf. I'm a financial clarity coach and a profit strategist, which means I help entrepreneurs like you increase your profits and decrease your stress. And I do that by teaching you guys financial literacy. I believe that financial clarity can not just change your business, but it can actually change your life. And that is why I am on a mission here on my tiny corner of the internet to help empower you guys to take the control over your money in your business and stop letting it control you. Now, before we get started on today's lesson, I want you guys to do me a favor and head over to thechicCFO.mykajabi.com/behind the scenes. This link will take you on a behind the scenes tour of my signature program, Profit Perfect. Profit Perfect is where I break down everything you need to know about small business finances. But here's what I want you guys to know and why I'm so passionate about this program. It's not the accounting your CPAs learned in school. This is not boring textbook accounting that you guys aren't going to care about. This is entrepreneurial accounting, and entrepreneurial accounting focuses on one thing and one thing only: profitability. This course will teach you exactly how to make and keep more money. Profit is the end game. That's why it's called Profit Perfect. And here's what I've learned in my years of studying financial literacy, okay? What you focus on, you create more of. So for my students, I show up on Zoom every single week, okay? My promise to everyone in my program is that there will be no student left behind. And the only way for me to make true on that is to show up and help you guys. Because yes, I love the scalability of having a course. It allows me to spread financial education at a much more rapid rate. But I also know that this stuff can get a little confusing and overwhelming, and nobody wants to do it alone. And that's why I show up every week, so that I am here to hold your hand and answer any questions you might have. So head on over thechicCFO.mykajabi.com/behind the scenes. You're going to get a backstage tour, see more about what Profit Perfect is all about. Guys, I have left it all on the field when it comes to this program. We cover everything from cash flow, taxes, whether you should be an LLC or elect S Corp. All of it is in there, making sure that you are priced to profit so that every time a customer buys something from you, money goes right in your pocket. All of it is in there, and it includes our weekly money meetings. Okay, guys, get them on the calendar, show up on Zoom, ready to ask questions. You have got to understand that there is a science to making money. It's all rooted in financial education. And I wish that it was more accessible and that it was taught in schools, but it's not. And I genuinely believe that the only way that you can create generational wealth is for you to understand how money works. Financial education is the key to getting you and your family where you want to be financially. So head on over. Again, it's thechicCFO.mykajabi.com/behind the scenes. Check out Profit Perfect. I'd love to see you on our weekly money meeting Zoom calls. If you guys have any questions about the program, you can shoot me a DM. I'm always on Instagram at thechicCFO. Now, today we are talking about how to read a cash flow report. And guys, I get lit up about this topic because let me just tell you, cash is queen. Okay. It's everything in your business, because the cold hard truth is even a profitable business can go broke because they run out of money. You have got to understand where every penny is coming from and where every penny is going. because you might look like you have $1 million in profit in your P&L on your profit and loss. And guess what? You might have no dollars in the bank. Believe me, it happens. I've actually witnessed it firsthand. People have a 7-figure profit and yet have no cash in the bank. So I want to be able to break that down. If you guys have ever been in a situation where your profit and loss is showing you that you have, as an example, let's just say a $20,000 profit, and you're like, well, that's impossible because I don't have $20,000 in the bank. That's the question I'm answering today. So tune in, stay here with me, grab a pen and paper, and I'm going to help you figure out exactly where the heck your money is going. Because I hear this all the time. They're like, I'm making so many sales, I'm bringing in new customers, but I have no cash in the bank. How can that be? I'm going to tell you guys how it can be. All right. So if you're in a situation where you don't understand where all your money is and you're looking at a profit and loss that tells you made a $20,000 profit, but there's no cash, the first thing I want to educate you guys on is cash versus accrual. Okay. And I'm actually going to show you this graphic that I made because I think it's really going to help you wrap your head around the concept. And if you guys are listening on the podcast, go ahead and head over to YouTube, do a search for Denai Wolfe, Denai, last name Wolfe, Wolfe, and you will be able to see my video on this, but I will do my best to articulate it to you listening on the podcast as well. So when it comes to accounting, guys, your profit and loss statement can be either run on a cash basis or an accrual basis. And right in QuickBooks Online, when you look at a P&L statement, you will be able to see that there is a little button that says accounting method. It says cash or it says accrual. And clicking either of those buttons will have a major impact on the way in which your finances are reported. So let's break down these two methods. When we talk about the cash method in accounting, it means that you are recording things as they are happening in your bank account. So what do I mean by that? Well, if an expense, let's say your electric bill, came out on March 21st, it is going to be recorded as an expense on March 21st, which means that when you pull a profit and loss report for March 21st, it's going to appear on there. Now, if you are running on the accrual method, expenses are reported as they're incurred. So think about it like this, all right? So your cash is when the money is paid out, comes out of your bank account. Accrual is when the expense was incurred. Think about expense incurred as a bill. So the day you received that electric bill, let's say you received it in February, that is the day that it would go on your P&L as an expense. But on the cash method, the day the money for the bill came out of your bank account is when you report it. So I hope explaining it that way with, you have the bill in your hand versus the money came out of your bank account makes sense. My goal here is always to make you guys have like aha moments. I love analogies and I love to explain it in a way that you go, oh, I get what you're saying. So if you're using the accrual method, the day the bill comes in the mail, it counts as an expense. If you're using the cash method, the day the bill clears your bank account, so that debit comes out, that is the day that it's going to go on the profit and loss statement. Now let's talk about revenue. Okay, how is revenue recorded on a cash method versus accrual method? Well, on the cash method, it's when the cash is received, when your client pays you. So if somebody pays via their credit card, if Stripe charges them on March 25th, that's the day you report it. Now, I want to be really clear on this one because it gets a little tricky. Because a lot of times when I explain to my students, oh, with the cash method, it's when, the cash actually hits your bank or comes out of your bank. And when it comes to something like Stripe, I'll have students who say, well, I charged the client on March 31st, but I didn't get the money till April. So wouldn't that revenue, wouldn't that sale count as April? No. Okay. And I'm going to tell you why. The day that you debit the client, that is the day that Stripe is getting that money, right? Stripe isn't forwarding it to you. And it might not be Stripe. It could be Authorized.net, Square, whoever you use as your payment processor, but they are charging the client that day. That is the day that you recognize it. So it might be a situation where on March 31st, Stripe charged somebody $500. You're going to put that on your P&L as revenue for March 31st because you charged the customer. The customer paid that day. So that's the day it goes on there. With the accrual method, you do it as revenue as earned. Now, depending on your business model, okay, this may or may not apply to you. So as an example, maybe you are someone who works now, charges later. So maybe you say, hey, I am going to let you sign a contract and I am going to build out your website over the next 90 days. You are not going to pay me until the website is completed. So maybe you sign the contract March 1st, right? But you don't get money for several months. Well, on the accrual, because you've generated that invoice and you have sent it to the client, but you didn't set the due date or anything, right? Because you've invoiced them, you do need to count that as revenue. And this is something that really trips up a lot of entrepreneurs, because what we will see is a profit and loss that shows $50,000 in revenue. And they go, well, that's weird because I didn't have $50,000 come into my bank account. Well, if you sent the contract, the invoice, to the customer, but you're just waiting on them to pay, that's going to go on there on accrual. So you might be in a situation where you earned it because you did the work, but the customer hasn't paid you yet. So when you pull your profit and loss on accrual, you're going to see invoices that have not been paid yet counting as revenue. When you pull it on cash, you're not going to see anything except for customers who have paid you. Now, remember the caveat here, the customer paid doesn't mean you received it in your bank. Okay, cash method is customer has paid, not necessarily have you received it in your bank. All right. Whereas with the cash method on expense, the money has to come out of your bank account for it to count. All right. Now, accrual, if you've invoiced that customer and you are sitting there waiting for payment, okay, contract's been signed, you've invoiced, you're waiting on payment, you're going to see that on your P&L. And something that I will have happen a lot is clients say, wait a minute, my revenue was 50 grand this month. I'm supposed to have $20,000 in profit. Where the hell is all my money? Well, let's take a look at that revenue. 25,000 of those invoices have not paid you yet. And I want to actually remove this graphic because I want to go full screen, not to be like dramatic, but I want to go full screen because I really want you guys to hear what I'm about to say because it's critical to cash flow. When you have a business model where you invoice someone and you've already done the work and now you're in a situation where you've done the work and you are waiting for somebody to pay you. Okay, this happens a lot with cleaning companies. Okay, you might have some commercial accounts where your crew goes there, they clean, you email the invoice, and now you're waiting for payment. Here is where you can get tripped up with your cash flow. Let's say it was a pretty big job, all right, and you invoice this customer for $1,000. They haven't paid you, but guess what happens? You have to pay your workers. So now you have to put out the money for the payroll. You had to put out the money for the cleaning supplies. But guess what? You didn't get paid for the job. So this whole accrual thing can really trip up your cash flow. Because if you are in a situation where you do the work and then invoice and sit and wait for invoices, that's a slippery slope. Because if they don't pay that invoice right away, you still have to pay the expenses associated with that service that you did. So I really want you guys to speak, hashtag disclaimer. I'm not here to give you tax advice. You have to speak to your specific tax preparer, but really think about, should you be running on an accrual or cash method? And I know there's going to be certain customers where they won't pay you until you've done the work. But I strongly urge you for cash flow purposes to really try to get on cash method with your clients so that you're getting paid right away. But For today's trading purposes, if you're in a situation where you're like, hey, my P&L shows a $20,000 profit, I don't have that. The first thing I want you to do is see, are you looking at a P&L on accrual or are you looking at it in cash? And if you're looking at it on accrual, how many of those customers have not paid you? Really important to look at. Now, the next part that I want you guys to look at when you're trying to figure out, okay, where is all my cash? You're going to look at your cash flow report. So here is how everything is going to work. You're going to pull into your P&L and we can see in this example, okay, this is a demo account. I'm not actually showing you behind the scenes of one of my customers. You can see we've got a profit of $19,307.12. Woohoo, right? So let's say we look at this and we go, oh, hell no, I don't have 19 grand in the bank. This can't be right. First things first, right? You're going to check the accrual versus the cash. Do you have invoices counting as revenue on here that just haven't paid you yet, right? Next thing you're going to do is head on over to your statement of cash flow report. Make sure you set it for the same dates, and you're going to see the very first line shows you your net income. Your net income is your profit from your P&L, right? Net income, aka profit. The cash flow report pulls that in automatically for you. So you can see the business on paper had a profit of $19,307.12. Now, the question becomes, where the hell is that 19 grand? Cash flow is going to tell us, all right? So saddle up with me here, guys, because I really strongly believe that one of the pillars to mastering financial literacy and having that solid financial education foundation is understanding how to read this cash flow report, okay? So we've got 19 grand. Where did the cash go? Well, we're going to see that when we look at this cash flow report, I'll collapse it so it's a bit easier to read. It's broken up into 3 sections. We've got our operating activities, our investing activities, and our financing activities, okay? These are going to be, think of them as outliers, items that were not on the profit and loss. So when we look at our profit and loss, we know that it's going to record our revenue and it's going to record our business expenses. And that's how it's going to spit out the profit. Revenue minus expenses equals profit. What then happened to that profit? There are certain transactions happening in your bank account that will not go onto the P&L. A prime example is when you take a draw, okay? As the owner, when you make a transfer to your personal checking account and you've paid yourself that way, it's not a business expense, okay? You paid that out of profit. So yeah, you had a profit of 19,000 in this example, but if you don't have 19 grand in the bank, maybe you took a draw. So if you paid yourself 2 grand, well, boom, now we only have 17 in the bank, right? So owner's draw is an example of something that does not go on the profit and loss. Another example of something that would impact your cash, okay, something that would come out of your bank account, but wouldn't be reflected on the P&L is your payments made to any loans. So if you have a business loan, the only part of the payment that can go on the P&L is the interest. The actual principal payment that you paid is not going to be reported on there. So QuickBooks is telling you your profit was 19 grand. Now you're trying to find the $19,000 in cash. Well, maybe you paid 2 of it to yourself and maybe you paid 2 of it to a loan. Now we've reduced our cash, but that P&L is still showing 19 grand, right? Because the principal payment and the owner's payment to you do not count as business expenses. Now, what you'll also find is investing activities. Investing activities is going to happen when you maybe buy or sell something that is an investment in your business. The best way for me to really explain this is think about purchasing an asset for your company. So maybe you purchase a brand new studio equipment suite, right? Maybe you got yourself a teleprompter, some lights, you bought all of this studio equipment, you spent a couple $1,000s. This is not a training on that, but high level, very quickly, I'll just explain to you guys. When you make an investment, a high ticket purchase into an asset in your business, aka something that you are purchasing because you believe it's going to make you money, right? That's what an investment is. When we spend money on something that we believe will generate money for us, right? So when you do that, you can't put it onto the P&L. You have to depreciate it. That's alive for a different day. But high level, what you guys need to know is these high ticket items that you buy, you don't get the tax deduction all up front. So you can't put it on the P&L. But you paid for it, right? So it impacted your cash. Operating activities on the cash flow report are going to show, prime example, a situation where maybe the customer hasn't paid you yet, right? So that's operationally happening, right? You went out, you did the cleaning service, you've sent them the invoice, but you have not gotten paid. So that is something that would reflect in the operating. So now that I've explained operationally, investing, and financing, let's dive into this demo account and look at the examples here. So I'm going to open up each of these sections. So you can see that we start with, there's our profit, 19,307 matches the P&L. In this specific example, there are no operating activities that impacted cash, right? But like I said, if you were in a situation where a customer hasn't paid you, you would be seeing that there. But when we get to the second section of the cash flow, we see investing activities. Well, we see that $6,000 was spent on studio equipment, right? So that means $6,000 came into the bank. So our cash flow would be impacted, right? We reduced our cash by $6,000, but we don't get to expense it. And let me be clear, guys. I don't want you to think that I'm saying when you make a big ticket purchase in your business that you don't get the expense, you don't get the deduction. You do. It's called depreciation. We can do a live training on it at another time. But for this example, it's not going to all $6,000 go on the P&L. So you don't get that credit, so to speak, as an expense on the P&L. But now you know where the cash went, right? Remember, we started this journey with saying, I'm showing a $19,000 profit. Where the hell's the 19 grand? Well, first thing we found on the cash flow report is, oh yeah, I spent $6,000 on studio equipment. Now let's move to the next section, financing, right? We've got Wells Fargo loan. That's a bank loan. We spent $2,000 going to pay off the principal of a loan. We can't put principal expenses on the P&L. There's another $2,000 of our cash. The next item we see is owner's draw. Paying yourself $2,000. Boom. There's another paper trail of where this money went. Okay. So now let's talk about this fourth section of the cash flow report. It shows you cash at the beginning of the period, and we've pulled this cash flow report for March 1st to March 31st. Okay. So this report is telling you, hey, you started March 1st with $50,927 in the bank. By March 31st, at the end of the period, you had $60,235. Okay. So we know that our cash went up about $10,000, right? But we know that the business had a profit on paper of $19,000. So where the heck did all that money go? Right here, $6,000 studio equipment, $2,000 principal payment on a loan, $2,000 to the owner's draw. All right, let's run those numbers. You're going to see that they match up completely. We're going to take 19,307.12. Let me move my calculator over to the screen so you guys can see it. And we are going to deduct the $6,000 for our studio equipment, the $2,000 for our payment to the Wells Fargo loan, and the $2,000 to ourselves, right, for the owner's draw. Now we know we have $9,307.12. That is what our cash went up by. So let's see if that mirrors it. Well, right here, cash at the end of the period is 60235 minus cash at the beginning of the period, 50927.88. Boom. Same exact number. This is how you figure out where's all my money, right? It's something entrepreneurs ask all the time. So let's break it down again. You guys are going to pull your profit and loss, okay? and you're going to look at your profit, which is the bottom line that says net income. First thing you're going to want to say is, okay, am I looking at cash or accrual? Because I need to know, did these customers pay me, right? Because it might be a situation, if you're running accrual, you might have some bills listed in expenses and the money didn't actually come out of the bank yet. Or you might have some invoices listed in revenue that haven't been paid yet. That's step one, right? Step two, come over to your cash flow report. Pull it for the same exact dates. What were the investing activities, operational activities, financing activities? This is the answers you guys have been looking for. Like for me, when I started my financial literacy journey, this was a huge, huge step for me in finally being like, where the hell is all my money? Here. Because when I began my entrepreneurial journey, I owned 2 quick service restaurants. And I never understood where my money was because it would show profit, but I didn't have cash in the bank and I could not wrap my head around the concept. And then I realized I had gone into debt to open one of the restaurants and I was making I'm embarrassed to say, almost $5,000 a month payment to the loan. Okay. That's where all my money was going. And I didn't know that until I understood the cash flow report. And like I've said, guys, even a profitable business can have cash flow problems. Why is that? I just showed you why. Look at how profitable this business is. They had $19,000 in profit, right? But then they invested back into the business by buying studio equipment for $6,000. They paid down some debt and they paid themselves. They cut that cash in half. So you could see how this could be a slippery slope where you could continue to see a profit, but then not have the cash to reflect it. And here is something that I want to really drill home, okay? The reason why it's so important to know where the cash is going is because the IRS, good old Uncle Sam, he's going to tax your ass based on this net income number off the P&L. He's not going to look at the cash flow report and say, oh, your cash only increased by $9,000, so I'm going to tax you on $9,000. No, he's going to tax you on the profit. So now you're in a situation, okay? And I want you guys to really hear this. You're in a situation where you've got a profit of $19,000, which means you owe tax on $19,000. But guess what? You don't have $19,000 of cash, because there's other activity happening on the cash flow report. This is why you guys have to be informed, right? You have to be informed because you need to be able to say, all right, here is where all of my cash is going. But I've got to be tracking the P&L to know what that profit is going to be because that's my taxable income. So let's run that number quick, right? I do a general rule of thumb. Again, hashtag disclaimer. This is not tax advice, but for me, I do a general rule of thumb that we're going to set aside 30%. So we're going to take that $19,000 profit and we're going to say, hey, we actually owe $5,700 in tax. All right. So now we know that we had other things come out of the bank that is not going to count as a business expense. So our cash only went up by $9,300. And now we also owe $5,700 in taxes, which means that when we really look at it, we only had $3,600 in cash. This is how you guys end up in situations where you're going, how the hell could I have a $20,000 profit? I don't have $20,000 in the bank. Here's where it's all going. Now, I hope you guys might not be nerds like me, so maybe that doesn't get you so lit up, but like, to me, that's like, oh my gosh, like, it is your right as an entrepreneur to know this, right? You guys have to know this. I wish it was taught in schools because I genuinely believe it is our right and we should know it. And they should be like teaching this on the nightly news, but they don't. So like I've said, I'm doing my small part here on the internet, but you guys have to know that because if you can understand, okay, my profit on my P&L is what I'm going to owe tax on, but there's other things going on in my bank account on that statement of cash flow report, right? And now you can be smart and strategic with how you do it. Because maybe you would be in a situation where you said, you know what? Maybe I shouldn't have bought that $6,000 studio equipment. Maybe it wasn't the right time. Maybe I should have spaced it out and did 2,000 this month and 2,000 next month, right? But in order to be able to make smart strategic decisions like that, you have to have this knowledge, right? And that's what I firmly believe happens when you, I mean, please tell me that you guys had an aha moment today, okay? Throw it in the comments. If you guys are listening on the replay and not listening live, go ahead and write hashtag replay. But I'm hoping that you guys understand how this knowledge can just equip you to make some savvy ass decisions in your business, right? We don't want to wing it when it comes to entrepreneurship. Like, we put our blood, sweat, and tears into this company. We want to be strategic. And it all starts with you guys understanding this, right? Understanding the way that money moves in and out of your business. So I know I said it in the beginning, but I'm going to say it again. Head on over to thechiccfo.com.mykajabi.com/behind the scenes. Guys, for less than $400 a month for just 3 months, it's all you have to pay for 3 months. All right. You're going to be able to take control of the money in your business, and you're going to have live Zoom calls with me to ask me all of your burning questions. And if you don't want the option for that payment plan, you can just make a one-time payment of $997. You're going to get lifetime access to the course, to all of its amazing resources and modules, plus our weekly money meetings where I show up with you. I am in the trenches with you, helping you guys figure it out. All right. I hope that this was beneficial. I hope you guys feel amped up and excited to learn more and really just start honing in on the reason why you started your business. You started your business to make money. So let's figure out where your money is. I'll talk to you soon.